So just in the last 2 weeks, I made several videos talking about how Tesla stock is likely to fall down, and in those 2 weeks alone, Tesla stock has fallen down 19.32%. And I want to provide an updated video for what's currently going on with Tesla. I want to go ahead and cover some of the macroeconomic elements that are taking place, as well as some of the fundamental conditions, and then touch in with a little bit of the technicals. Right now, I also did make videos about Tesla stock likely to fall down around these euphoric highs, but of course, no one wants to hear about a stock going down when it's at all-time highs. People are like, you're a clown, you don't know what you're talking about, right? Because, people just have this tendency that when things go up, they're going to forever go up, right? And they like to ignore the facts. But, long and behold, people are starting to kind of listen right now. And I want to go ahead and talk about a couple of things that we should be mindful of. Now, real quick, if you haven't done so already, make sure to subscribe so you don't miss out on future videos. But I want to touch on what just came out today, right? We had this report, and we actually see this is Wells Fargo that pulled out this, the publication. Of course, they sourced the data from the ISM report that came out. But long story short, you could pause and read all this, but I'll go ahead and just make this as simple as possible to understand. Right here on the right, we have the ISM prices paid index, and essentially this just tracks how much businesses are paying for raw materials and supplies. And when the index rises, it just means that companies are paying more, which often leads to higher prices for consumers. And so, we have to kind of talk about why this is a bit concerning, especially for what's right around the corner with tariffs, right? Now, let's go ahead and talk about this, right? This is my little sticky note here. Let me make this a little bit bigger. So, how tariffs and rising, or I'm sorry, did I write that right? How tariffs and rising input costs could impact Tesla. I did write that. Okay, fine. Thought I wrote that wrong and whatever. I just apparently can't read. But what I wrote here, right, is we have higher prices going on, but we also have tariffs right around the corner. We'll talk about that in a bit, in a second, right? For example, tomorrow we have possibly tariffs going on again, right? And tariffs on imports from China would, of course, increase the cost of lithium, nickel, and cobalt, which, of course, as we all know, are critical for EV batteries. Now, of course, with rising prices, that's also going to hurt margins, right? We're going to have this margin compression because Tesla, as we all know, has been aggressively cutting prices over the last couple of years. Why? To stay competitive, right? They're trying to have that demand. But if input costs rise due to tariffs, well, that compresses margins. That's not good. But overall, what we could see that's not only going to hurt Tesla, but the broader markets is the Fed impact, right? Because if tariffs continue to, actually take place and if they actually start getting implemented, it's going to contribute to inflation. And with inflation coming back into the picture, that means that the Fed would delay rate cuts. And we all know, and I probably shouldn't have to explain this in this video, right? But we all know that when the monetary policy is at reduced levels, that's very bullish for the market, right? When it's at extreme highs, well, that's not good for the market. It costs more to expand and grow for a lot of these companies because borrowing now costs more money. And so, of course, we all want this kind of low interest rate environment, but we can't have that environment actually come to life if we have inflation kind of get revamped due to these tariffs. Now, why am I kind of talking about tariffs again? Am I just some madman? No, because here we have this is a snippet from Bloomberg, by the way. What we have here is tomorrow, maybe you're watching this on March 4th, right? We may have additional 10% tariffs on China and then tariffs on Canada and Mexico, right? Because, of course, it was already implemented, the 10% China. And why this is a bit concerning is and I say if, and the reason is because there's this talk of, well, Trump isn't really going to do it, right? It's kind of the negotiation, the art of the deal. We don't know, right? It's a lot of tariff talk, and we're not sure. But if it does end up happening, we see here that Bloomberg highlighted that this would pretty much bring tariffs back to what we saw in 1945, right? So pretty high for tariffs. And again, that will likely cause a surge in inflation. We all know that, okay, let me not say we all know, right? A majority of us, okay, a majority of people understand that tariffs are inflationary, right? You could just go on Google, go on ChatGPT, whatever source, read, look this up, right? Pretty inflationary, right? Well, another thing we have to be concerned of is Tesla brand, and I talked about this in some of the recent videos, right? For example, just 4 hours ago, Massachusetts Tesla charging station intentionally set on fire, right? Now, I've talked about how the Tesla brand has been getting weakened pretty much by the week. There's a lot of hate for Elon. There's a lot of hate for the Tesla brand. And we don't have to go into why people are feeling this way, right? We've talked about that in the past. And every time I bring up the Tesla brand kind of having a negative sentiment towards it, I always hear people say, no, it's not the Tesla brand. Sales are declining because, they have the new Model Y refresh. And okay, look, they're literally, my brother in Christ, they are literally lighting up charging stations, right? We're seeing Teslas get vandalized. You can't even drive a Tesla in a lot of places without getting flicked off now, right? And so the reality is, yeah, we know that the refresh model has some sort of nuance to the story of why sales are declining in Europe, like France, Scandinavia. I talked about in a couple weeks back, as well as Germany. Right, the Model Y refresh is part of the story, but it's also the brand. The sentiment of the brand is getting hurt. And what we're starting to see, right? Just a week ago, I talked about how Tesla was the fifth worst performing stock in the S&P 500. Well, guess what? Now it's the fourth worst performing stock in the S&P 500. The worst performing stock in the S&P 500 is ticker symbol EIX, but Tesla's not too far off, right? And that's why, I don't marry these stocks. I've made lots of great, returns on Tesla, especially as someone who rolled Tesla back up during the 2019 to 2021 era. But, one of the things we have to understand is that things change, right? And and again, everyone has their own approach. So again, you should only trade and invest in whatever you see value in. But for me personally, I have been out of Tesla for a while, and I'll be jumping back in when the time is right. And I often say in a lot of my videos that the dip can end up getting dippier. And so I don't want to just buy any random dip. Now, if you've been following the channel, right, within the last few videos in the last couple of weeks, I talked about market profile and how this basically measures price by how long it's been at those areas. And when we see price having a little bit of time in certain areas, there's low liquidity. And when there's low liquidity, the order books could get pushed up if there's buying pressure very quickly, or pushed down if there's selling pressure. And I mentioned how, on the way down here, this was dangerous. If there's just a bit of selling pressure more than buying pressure, that could push Tesla down pretty fast. And that's exactly why we saw these big candles falling downwards, right? Because low liquidity around these areas on the market profile. But I ended up drawing this area of support, and I mentioned how this area is area of support because in the past it was an area of resistance, and with the principles of polarity, old resistance ends up being new support. But just because a stock bounced off a support, and we could clearly see it bounced off of this support that I drew very well, right? But it still didn't cross above the 200-day moving average. Now, the 200-day moving average, basically just think of it as it's measuring, a stock's performance and averaging the last 200 days. And the best way to understand this in plain, simple English is when a stock is above the moving average, it's good news, right? There's momentum. When it starts crossing below the moving average, well, that's, where you have a problem. And recently, we crossed below the moving average, but we bounced. We held up. And I said, okay, well, we want to see what ends up taking place. Now, if we bounce and up and we cross above the moving average, great. But we haven't seen that so far. We actually bounced and got rejected, literally right around the 200-day moving average. So still in a concerning area. It's not a time to clap and applaud and buy the dip. But of course, if you see value in buying the dip here, then all power to you. Again, I'm not here to tell you what you should do with your portfolio, right? I'm just here showing what's going on with the macroeconomic data that we're seeing, the sentiment towards Tesla's brand. and also some of the fundamentals, and of course a bit of the technicals. I like to, as I often say, synthesize multiple different data points. Oftentimes you hear people just talking about technical analysis, and they're like, oh, a stock broke below this level, so it's going to fall down, but they have no clue on why the stock broke below this level, right? That's oftentimes you even see people using technical analysis completely incorrect and wrong. But it's one of the easiest types of analysis to do, right? The harder analysis is when you're deep nose in Excel, or you're looking at Edgar.com and you're seeing the actual income statements, the balance sheets, that's where the real analysis takes place. And right now it's not looking well for Tesla, right? I'll give you guys a mini story, a mini personal story, right? I recently went to Denny's, by the way, with my fiance. Service was horrible. Not the waitress, right? The waitress did a great job, but it's been like the third time where I went to Denny's and they just didn't have what was on the menu. Third time, and I made a joke to my fiance. I was like, man, we should start shorting Denny's, right? And I started looking at Denny's financials, and no wonder the stock is falling down, right? They closed pretty much 81 locations last year, right? They're closing stores left and right. They're predicting that they're going to close more stores. And funny enough, and again, I don't want to say names because, again, this is like personal life stories, but my fiance mentioned how someone was saying, oh, this is the perfect time, and this was right before today. This is the perfect time to buy Denny's because it's so low. And that's like the mentality that a lot of people will have in the market. Oh, it's $5, right? This is a great time to buy Denny's, not knowing that the dip could get dippier. And look, Denny's fell down even further, right? And just so you know, when a stock is trading below $5 and it's not listed on a major exchange, it's technically considered a penny stock. Now, I believe Denny's is traded on the NASDAQ, or the New York Stock Exchange, actually. My apologies, the New York Stock Exchange. So, by definition, not a penny stock, but it might as well be a penny stock because, look, I mean, we're just going. And another thing to understand is people will say, oh man, $5, it's great. Well, once you start getting to the smaller prices, going from $5 to $1, that's a huge drop percentage-wise, right? When you drop from $100 to $95, it's not the same as when you drop from $5 to $1. I don't think a lot of people grasp like the actual change in percentage and how they vary based on the percentage move with the dollar prices. But nonetheless, you often see people say, oh, well, let's buy the dip because it's cheap. Well, no, right? That's kind of not how you want to look at technical analysis, right? You don't want to just buy something just because you see, oh, line graph down. This is a great time to buy, right? It's almost very barbaric. I don't even think barbaric is the right word for that, right? Just a very simple, horrible approach, right? I can't even think of the words. It's just horrible, right? You want to actually look at what's going on. And when we look at the fundamentals for Tesla, right now, there's not a lot going on. Now, I know that Uber Tesla bulls are going to talk about, well, what about Optimus? What about the robo-taxi fleet, right? But those are a lot of what ifs. And of course, once we start seeing that come in, then I would even start buying into Tesla. Once I start to see price start to actually move up and actually see a change in the fundamental picture. But we could absolutely see things go down even further, right? Especially if the fundamental picture does not change. So I'll end the video here. No need to rant any more longer. I think you guys got the point. Again, hopefully people are not saying, Justin, you just hate Tesla, because that's not the case at all, right? I just don't marry a company. I don't marry a CEO, right? I just call it as it is, right? I try to stay unbiased and just look at what's going on. And right now, it's not a pretty picture for Tesla. And the main thing that we want to see is, can we see Tesla now push back above this 200-day moving average? Sometimes I like to switch to a line graph because it's just a lot easier. Right? Just line graphs only show the closing price, so it takes a lot of the data. It makes it very clean to watch, actually. But we need to see price move above here, and we need to see a change fundamentally. But until then, I am still kind of, waving the flag of caution for Tesla. But with that said, hopefully you guys got some value in this video, and I'll see you guys on this next video right over here. Take care, guys.